Hello, traders. Gary Wagner here. Approximately 2 o'clock in Honolulu, 7 o'clock in New York on Wednesday, first day of December 2021. And this is the daily report for gold and silver. We had mixed messages with stocks moving for the most part lower today and gold moving higher. The lower moves in stock were continued concerns about both upcoming Federal Reserve actions as well as the new Omicron variant of the COVID virus, which has now been identified in the United States. As far as gold goes, it seems they have largely factored in the acceleration of tapering and a rate hike next year because that reacted positively, moving up about $6 on the day. We'll talk about the specifics on today's video report. Two factors today were highly supportive of gold. First of all, the CDC announced the identification of a COVID variant, Omicron, being detected in the United States. That with many caveats, and the caveats are that the person that contracted this variant did not get exceedingly sick. He had mild symptoms and is now in self-quarantine. But there still remains many unknowns about the new variant. The second issue was that Powell spoke for the second day to the Senate Banking Committee and in essence reiterated what he had said yesterday, and rather than using the word transitory, he made statements such as, "We believe that inflation could last much longer than we originally anticipated, and we are putting into motions the necessary tools to combat that." And that, of course, would be, in essence, a bearish statement in terms of market sentiment for gold, but the market is largely baking in that recent information over this last week or even 2 weeks based on the decline that we have seen in gold. Nonetheless, gold did gain $6.60, and as of 6 o'clock in New York, is currently trading at 1783.10. In terms of the high today, that came in at 1795.70, and the low came in at 1773.70, which means it had a higher low but not a higher high. The other thing that we do want to note is when we look at the 200 and 100-day moving averages, the high precisely matched those two moving averages, which are very, very close together currently. Silver declined by 50 cents. Did have a strong sell-off today, currently fixed at 22.31.5. That is a 2.2% drop. And the dollar had neutrality, meaning it neither helped nor hurt both gold and silver pricing today. This first chart that we are looking at is a simple line chart, 45-minute increments, and it is based on the high rather than the close, so we can take a look at the range. We can easily see that the market really accelerated in the first part of the session, actually trading above $1,811. And you can also see the exact moment when Powell began his testimony to the Senate Banking Committee, because the market moved from $1,811 down to these lows at $1,775. Today was quite different. We had renewed concerns about COVID. That spiked it up. So we can see that this high came in just shy of about $1,800 by about $4. And then when we look at the lower end of the range, that comes in at around $1,782. Compared to the range of yesterday, it is subdued to say the least, and shows that market participants are not only beginning to absorb the information that is out there regarding Powell's testimony, future actions of the Federal Reserve, and the effect of this new variant, but beginning to assimilate that into current pricing. And the fact that we had such a narrow range today tells me that for a large part, market participants have factored this news into current pricing. We are looking at a daily candlestick chart of gold basis most active February contract. You can see that gold has begun to trade overseas and is in fact trading slightly above where they fixed the close. Gold is currently at $1783.90, up 40 cents on the day. But what is more revealing to me are two things. They have to do with the moving averages as well as this compression triangle that we put in some time ago. And first we'll address the compression triangle. Once the market sold off very, very aggressively and quickly and had dramatic price declines, we have seen a series of closing prices over the last couple of trading days, over a week, that have all come in within the confines of this upper level former support after the breakout that I now believe is resistance, and the new support line, which was the support line previously. My sense is if gold pricing can remain above this line, that is a positive statement, because of the fact that gold has opened and closed within the confines of this compression triangle over the last 5 trading days tells me that although there is extreme volatility, as seen yesterday as well as last Friday, we've not been able to break above or below either the upper level resistance or the lower level support. For us to get confirmation that gold is going to move lower, we would want to see it break below this line right here. For confirmation that gold is about to trend higher, we would want to see it break above resistance and have resistance become support. The second thing that's important to me are the moving averages. Let's go ahead and put those up. We have just added the moving averages to this chart. And what is noteworthy, first of all, is that we have both the 50 and 200-day almost on top of each other. That is this line here. You can see that the 200-day has been moving closer to the 50-day. In other words, there's been a convergence or a narrowing of range between those two moving averages. The 100 is still on top, which means that we have 2 distinct areas for the next levels of resistance. The first is between 1791 and 1794. It is based upon the 50, 100, and 200-day moving averages. The next level comes in between $1,799 and $1,804, and that is based upon the 61.8% retracement from our shorter data set and the 50% retracement from our longer data set. But the next thing we want to do is see if the strength of this trend is either picking up steam or beginning to diminish. On the Western side, we do look at moving averages, specific time lengths, and look if current pricing is above or below that. When we did that, we could see that current pricing is below all 3 major moving averages, the 50, 100, and 200-day. However, it doesn't tell us if the trend is diminishing in strength. The way to do that is this, putting up these Heikin-Ashi charts. What you can see is absolutely the selling pressure has been diminishing to a great extent. You can confirm that by looking at these large candles with no upper wicks, and then over the last 4 trading days, we have seen a return of both upper and lower wicks. On the way down, it is not the lower wicks that we focus upon, but rather these upper wicks. Because what that tells us is that at no point during the trading day did pricing go below the midpoint of the prior candle. The same is true for the upside, but it's the same thing. We look at the lower wicks, and that gives that strength. In the case of what we're looking at now, we see a diminishing in trend. We have a possible pivot here with the small candle, but this is just forming from today's activity overseas, and it is much too early to make a determination. When we look at the final chart on gold today, a 3-line break chart, we can see that there is an ever so slight cyan-colored candle right in here. It is a very small candle, and it indicates a slight chance of a reversal to an uptrend. But it is so early in the trading session, I don't think it warrants us reading anything into it. Lastly, a quick look at silver. Silver continues to trade under pressure and has a much larger percentage drawdown than gold. The easiest way to look at it is if we draw an arrow through this point, recognizing that this was the low on November the 3rd, the same time gold had its low before the rally. Currently in gold, it is still trading above this particular low that came in, but silver has broken down much more harshly. An easy way to see that silver, in terms of price decline, has experienced a much greater drawdown on a percentage basis than gold. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.